Appreciate everybody coming. It's actually the 21st of December. It's the shortest day of the year, the winter solstice. And no, this is not a winter solstice party, but I'm glad you guys all came. And Christmas is 4 days away, but you're all here. So I thank you all for coming and appreciate you guys being here tonight. So my name's Rob. I organize Idea to IPO. We've been doing events in Silicon Valley for a number of years. We hold events multiple times a week from San Jose to San Francisco. We have a busy, busy calendar of events. We actually had a few events this week leading up to Christmas. We're pretty much done for the year as far as content events go. I want to announce two that are coming up in January. January 12th, in collaboration with Access Silicon Valley, we have a fireside chat featuring Bill Clerico, the founder and CEO of WePay. That's going to be at Plug and Play in Sunnyvale. January 12th, we have a webinar, 12 noon, that's featuring Jason Putnam-Gordon. He's going to be talking about Series A funding. So check out all the details on our site, ideatoipo.com. We were launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 40,000 members among all our meetup groups in the Bay Area. We've completed over 1,680 events. We're the most, not yet, we're the most active, most prolific startup event organization in Silicon Valley, bar none, now.
Okay. Oh, wow.
All right. Yeah, I like this crowd. But since I'm on the roll, let me expand on that. So we're the most active, most prolific startup event organization in Silicon Valley. And Silicon Valley is the global center of entrepreneurship and innovation. That would make us the most active, most prolific startup event organization in the entire world. All right, we're in for a good night, I can tell. I can tell. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that is practical, actionable, and relevant, stuff that you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is an aspirational ecosystem, and it attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley? Cool. Who was born and raised here in Silicon Valley? Not just you guys? Okay. So whether you're a native or you just arrived last night, it's important for us that we provide multiple channels for you to meet people, build relationships, and grow your network. In fact, we have a regular TGIF, that's Thank God It's Friday, social networking event every few weeks at the Hyatt Regency Santa Clara. It's hosted by one of our team members, CJ Terrell. Let's hear it for CJ.
Hi everyone, I'm CJ. Thanks for coming out tonight. As Rob mentioned, we have a TGIF mixer this coming Friday at the Hyatt Regency in Santa Clara. It's too close? All right, this is better. Yeah? All right, cool. So it's this Friday. It's a great way to meet people that come out in the community from all over the world. I've been doing them for a while myself. I've met people from probably about 40 to 50 countries, and you can meet everyone from entrepreneurs to investors, young professionals, those who have really made their name in any industry that they're working in. And it's free, and again, it's Friday from 8 to 11 p.m. right across the street from Levi Stadium at the Hyatt Regency. Hope to see you there.
With regard to value, it's important that we provide value at each and every one of our events. Not just value for your money, which is important because we know a lot of entrepreneurs are struggling financially. So we make sure our events are affordable, and if you can't afford it, talk to me, and we always need volunteers to help us execute our events. We also want to make sure that we provide a decent meal at each and every one of our events. Was this meal decent? Well, somebody thinks it's decent. I personally prepared it myself, so just for you guys. More importantly, we want to make sure that we provide value for your time, which is your most valuable resource. Anyone here getting any younger? I didn't think so. So when you attend our events, we want to make sure that you maximize your ROI. We have a lot of partners that help us do what we do: law firms, venture capital firms, angel investor groups, incubators, accelerators, co-working spaces, colleges, universities. Tonight, We're grateful to the Cuckoo's Nest and Boot Up World for hosting us at this beautiful venue. I'm actually a charter member of the Cuckoo's Nest. Although I subscribe to Groucho Marx's maxim, I would not join a club that would have me as a member. But I'm a member, and I want to have Kevin, who represents Cuckoo's Nest and Boot Up, say a few words. So let's hear it for Kevin.
Hi, I'm Kevin. I'm the program director here at Boot Up World, and I also handle events at the Cuckoo's Nest. Here at Boot Up, we try to be the launch pad for startups in Silicon Valley. So if you have a startup idea, we provide various assistance. We have a co-working space, obviously, the facility you're in. We have a fund. We're helping startups get angel money. And we also have a network that consists with the private network, or the private membership club, which is the Cuckoo's Nest, where we try to bring Silicon Valley-minded entrepreneurs together to collaborate on their projects and ideas. It's also a good place to occupy working space as well. As a Cuckoo's Nest member, you get to hang out and have your meetings and collaborate with the other members Monday through Friday from 9 to 6. So I left some flyers at the back there and also some of my business cards. So if you're interested in any of the above, feel free to grab one of them and feel free to reach out anytime.
Reportedly, it's called Cuckoo's Nest because some entrepreneurs are cuckoo, but that's not a requirement to become a member. So though our local mission is to support entrepreneurs here in Silicon Valley, our greater mission is to democratize entrepreneurship all around the world. To that end, we have a robust YouTube channel, youtube.com/idea-to-IPO. We have tons of videos. We've documented many of our events. This rich content is available on demand, anytime, anywhere, totally free of charge, whether you're in Menlo Park, Maui, Moscow, or Timbuktu. Who's been to Maui? Cool. Who's been to Moscow? Cool. Who's been to Timbuktu? Cool. Point being is there's Wi-Fi access in all these places, and everywhere you have access to Wi-Fi, we want to ensure that entrepreneurs have access to the great content that we have going on here in Silicon Valley. Our partner in this endeavor is Tim Jeggers of Jeggers Films. Let's hear it for Tim.
Thank you, Rob. Thank you, everybody. So I'm Tim. I am the video partner with Rob and Idea to IPO. You'll see me tonight and at other events if you've been to other meetups. I put the videos on the YouTube channel. I also do some photography. Just digital content creation is kind of my thing, but I specialize in video production. So if you have questions regarding any of that, I'd be more than happy to talk to you later on after the event. I could help you out or point you in the direction of people that could if you have any needs relative to all of that. One thing kind of relative to that I'll mention, more important to tonight's event, is when you have questions, which I'm sure a lot of you probably will, please wait until the panel is done with their discussion. We're going to go about a half hour, I believe. And then when you have questions, we're going to line people up here to keep it orderly, and that way we get through more questions instead of running around the room. And we're going to have you come up here and use the microphone so that I can put all the sound in the video for the YouTube channel, as Rob previously mentioned. And that way when you watch it or other people around the world watch it, they'll know what we're talking about. So that's pretty much everything I had to say. I'm going to pass it back to Rob, and we can get this thing going. Thank you for your time.
I have to mention that Tim also does weddings and birthdays. He does a great job. And if you have one coming up, let us know. We can get you a discount. Without further ado, I want to pass it off to our distinguished moderator. He is an iconic figure in Silicon Valley. He is one of the most prominent venture capitalists in all of Silicon Valley. He is a dynamic speaker and moderator, and he's a very nice guy. Let's hear it for Bill Reichart and our panel.
Thank you. Thank you very much, Rob. Thank you all for showing up tonight, this holiday week. And we're kind of wondering, does this enhance our credibility, or does it? We're good? Okay. All right. So it's almost the end of 2016. Unbelievable. So what we're going to talk about tonight is how did it go? What was everyone's experience? And then what's it look like going forward? And so what you got a hint of is we want to make this interactive. And so we want you to be percolating up these brilliant, insightful, profound, challenging questions for our distinguished panel here to answer, to make sure that you leave tonight feeling as though you've gotten full value the way Rob wants to give you full value. Right, Rob? So that's the whole idea. We're going to have a highly interactive, highly, hopefully, energetic discussion here. So what we're going to do is first start by having the panel introduce themselves. And Salil, if I can ask you to start, just give us a brief introduction, yourself, your firm, and how you got to where you are in a short amount of time.
Well, my name is Salil Pradhan. I'm a venture partner with a firm called Raper Nexus, which is a cross-border fund investing in Japan and the US. And I guess how I got here, well, I was in the room outside, and you pulled us in here.
Hi. Hi. Hi, I'm F. Lindebaum, and I'm a recovering entrepreneur. So I've sat in all of your chairs before. I founded Advanced Ventures after exiting on the entrepreneurial side. That's what you do in Silicon Valley, right? Start another one or start a venture fund in 1999. We're just wrapping up our third fund. We invest across 4 core verticals: fintech, health tech, ag tech, and food tech. And we do this, Bill. I've known Bill, actually, I just realized, for 12 years.
Only 12?
You invested in one of our deals in 2004.
Was that late?
This is a team sport, everybody. I think you should know.
I should have known you earlier than that.
That maybe. Who knows? There you go. There you go. So we're an early stage investor, and we love to look at great startups.
Hello. My name is Steven C. I'm the co-founder and managing partner of Eastlink Capital. We are a technology-focused venture firm, range from early stage to some selective later stage companies. We focus on data/AI and consumer mobile, and we usually invest in Silicon Valley-based companies and help them to go to markets in China. So we do have a China angle. Prior co-founding Eastlink Capital, I was a managing director for Riverwood Capital to cover our investment in China, in mostly software and services space. Riverwood, which is a $2 billion gross capital technology private equity firm. Literally just next door. So didn't travel that much. Yeah. Thank you.
Okay, great. So now you know the panel. I want to find out a little bit more about you. So tell me, how many of you are entrepreneurs? Okay. How many of you are investors or angels or, okay. Entrepreneurs, you're paying attention, you're getting the hands, I assume. You're, okay, just want to make sure. Okay, on the entrepreneur side, how many of you have already started a company, your company? Okay. How many of you have already raised your initial capital? Okay. How many have raised capital from VCs? Really? One. That's it? Wow. Okay.
Why do you think everybody's here, Bill? They're trying to figure this out.
No, I mean, I'm not surprised that it's a minority, but that's okay. So great. So you're all here. You're all here to understand what goes on inside the mind of a VC, assuming something does go on, right? Okay. So that'll be part of the discussion. And guys, it's up to you, right? All right. So what does go on inside the mind of a VC? Well,
Fear, panic.
before we go into that, so let's talk a little bit about what has been going on in the venture world recently in the year 2016. So, gang, I want to get your perspective, looking backward from the future. So 5 years from now, a few years from now, people will look back at 2016 and they'll say, wow, 2016 was a pivotal year. 2016 was the year that
VCs took a breath.
VCs took a breath. That's what happened this year. VCs took a breath. Huh. Interesting. Okay, Salil, what happened in 2016?
Look, I think some level of realism set in.
Realism sank in. Okay. Stephen.
Surprises. A lot of surprises this year.
2016 was the year of surprises. Okay, so now, parsing those comments, the implication from F is it was the year they took a breath. So that means that next year it's going to get even better?
Well, I mean, next year is the year of the IPO. That's what the core VCs think about, right? I was going to say it was the year of the secondary, but that wasn't really relevant to this crowd. But what I think we saw this last year was a bit of a breath from the go-go era that has sort of been in place from sort of late 2012 forward. Since Facebook went public in 2012, there's been just a pile-on into the venture space. And I think that as funds step back, some of them were raising new capital, some of them generated new capital, and you have to understand, you know, we're an ecosystem unto ourselves, and you have to fit into our ecosystem. So as funds were raising new funds, getting ready to deploy capital, there was a lot of, and I hate to use the word soul searching, but I think strategy alignment is probably what we told our LPs or our investors. And what that really meant is stepping back and saying, does the economics of spending $1.10 to make a dollar make sense? Do areas like frontier technologies really make sense right now? Being the first one in the boat, you don't always get the best seat. So to a large degree, I think VCs step back. Then we had a lot of global issues that have taken place. An election, which some of you may have noticed, but also things like Brexit and some high-impact sports that occurred in the European theater. You know, China has gone through some things. India is currently in a huge, challenging, you know, currency battle. So when you kind of roll all these pieces together, what it does on our side is it says, let's take a breath and start to evaluate what's a real company. So I think we've seen a little level off in terms of valuations. I think the back of the napkin deals have gone away. I think the next Uber is not something you're hearing anymore, and it's becoming interesting.
Okay. So Stephen, it seems like, oops, I'm sorry, Salil.
Stephen, if that's more convenient.
You're much taller. You're much taller. Let me go to Salil, because your comment seems similar to F's, right? So what do you think the trend is? I mean, in terms of from here, are we going up or are we going down?
Yes.
Oh, good.
Okay. Here's the way I look at things, right? The worst of years is sometimes the best of years to start a company. So as an entrepreneur, I don't think you should worry about whether the year was great or was bad. I think you should worry about the opportunities that lie ahead for you, right? And I think one thing we've noticed in 2016 is we all know mobile is big, mobile is huge, but I think we have realized that mobile as a channel for growth is extraordinarily hard. You launch a mobile app, and now you want to get users for the mobile app. 5 years ago, you would come up with very creative ideas, viral loops, interesting videos, all kinds of creative stuff to get users. Super hard to do that in 2016. And you've seen this with Uber and Lyft, spending huge amounts of money to acquire users. I won't argue whether it's good or bad, but they have been spending a lot of money. It's been very, very hard for young startups to go in and acquire users. So to me, 2016, if you were in 2020 and look back 4 years back, I think whether it's 2016 or 2017, you'll notice that something changed because user acquisition was very, very hard. And I think maybe something new emerged out of that.
Interesting, which is it's a little contrary to this trend we've been on forever, right? I just want to drill into this a little bit more because as far back as we can look, each year has been so much better, faster, easier to acquire customers because the world has become a broader, flatter, more connected place. And so only a few years ago, if you had 1 million downloads, you were like totally killing it, right? This year, 1 million anybody can get 1 million downloads.
Well, I think what happened is people look behind the curtain, and 1 million downloads weren't as important as your deinstall rate. And having played, in our case, on the mobile advertising side for so many years, we were actually seeing data that suggested many of these things. So for example, the mobile space from our perspective started to kind of roll downhill in the 2014, early 2015 cycle, mostly because what we saw is a deinstall rate rise. We saw sort of a consumer flight to 7 core apps, and really nothing beyond that getting critical mass. And you know, when you look at microcosms, like we have some European mobile companies, it's very easy to look at a European country. It's a smaller economic sense, but it's a very good sort of canary in a coal mine for the US, because it allows us, if let's say the UK or France or Germany, we're starting to see core trendings, that can carry over. And what we saw is deinstall rates above 80%. You know, what we saw is a level off between 25 and 150,000 active users. And so the economic models started to fail, right? Advertising, subscription. And after a while, you started to see startups come in and, you know, it was like a check the box, right? Oh, we're going to charge a subscription or we're going to advertise. Whereas now we're seeing much more innovative startups, which are figuring out how to give it for free to the customer and go charge the carrier or go charge the bank or go charge someone else. And unfortunately, the advertising didn't work.
I would argue almost the reverse in some sense, right? So
Got to have a fight.
Epnos, I'm sitting to his left. I'm going to take a slightly left position here. You know, look, here's what's happening. My perspective. 5 years ago, if you're doing a mobile startup, you were thinking of creative ways of getting users. When you said you had 1 million users 5 years ago, I would actually ask you how you got them, right? What did you try? I'm curious to know whether the mechanisms you used would scale, right? Now when you tell me you've got 1 million downloads, I ask you how much have you raised? Because you spend money to get them, and I now know there's a formula for getting 1 million downloads.
Yeah, it's
right?
straight arbitrage. I mean, it's straight
It
CAC
is.
arbitrage.
Exactly.
But that's not our business, though.
So,
That's the
Stephen,
problem.
Okay, so we'll come back to this. Stephen, 2016 was the year of surprises. So in your mind, what were the most material surprises?
You mean other than
Donald Trump?
Donald Trump? Or, okay. AlphaGo beat the the Go champion. I think
Oh, I'm sorry. The biggest surprise was DeepMind beat Go.
I think that's one of the surprises in the technology world. To be honest, I was not expecting that DeepMind be able to that advance and beating the champion of Go. So that's definitely one of the surprises. I think second, I wouldn't say exactly surprised, but I think the kind of speed of seeing this bubble, kind of starting to burst is a bit faster than I expected. I've seen the announcement of Magic Leap, the certain sort of, kind of, I think realism, if you will, that poking to the bubbles over there, and a lot of talks about some other frontier technologies. I think F was saying that at the beginning as well. So I think the speed of this bubble that we thought has been slowing, kind of brewing, and now started to, I think, settle down a little bit. I think that's to some degree. I think on the one hand, as an investor, I welcome that changes. On the other hand, I think it's coming up pretty fast.
That's interesting. I mean, everybody has a different sort of way they remember history. So thinking back a year ago, I was on a panel like this about a year ago, and fourth quarter of 2015, everybody was worried. Oh crap! This world may be coming to an end, right? I mean, that this wonderful ride we were having, all of a sudden seemed like it was getting shaky, and the unicorns were getting shaky, and China was getting shaky, and everybody was getting shaky. And, I kind of think of 2016 as, it seems like it turned out better than it felt like it was starting.
Well, there were some things that, so I think one has to look at it from two perspectives, and I'm going to kind of drill this down a little bit to what most of the entrepreneurs in this room are probably thinking about, which is angel investing and smaller amounts of capital to get your businesses really running. Because that actually has gotten stronger over 2016. We've seen more angel activity. We've seen angels doubling and tripling down on deals in a way that we haven't seen. In fact, one of our biggest challenges when we look at venture deals is that there's been too much angel money's come in, which pushes the venture valuation up in order to create what we call fresh money in a deal. And that is a very important issue, because when the angels, the people you might be raising money from, are so flush because of the public markets and other businesses that they may be involved in, they tend to often, let the startups continue raising capital when they needed to cull the herd. So we're seeing startups come in that have had $2 and $3 million worth of angel capital that's come in. And, that's like the kid staying home at 28 years old living in your basement. It's time to kick them out. I mean, and you should have kicked them out when they were 18. And at the end of the day, if you're an angel, and I saw a couple of out there, that is your big job. You're supposed to help us filter. I mean, you're a huge part of the ecosystem.
Wow, spoken like a VC. Angels, it's your job.
That's right. Push
To
down.
make our jobs easier, right? That's it. So wait, I want to go back to Stephen though before I get Stephen, because a huge topic. I mean, it's more than a topic. A huge factor now in Silicon Valley is China, and we've seen both a bunch of new Chinese venture funds. We've seen all of the Chinese corporates. We've got there's just a lot of increased flow that that people were anxious because of the August 2015 meltdown, that maybe that one, it feels like it's pretty strong. Is that fair? Is that true? How much money is flowing into Silicon Valley from China?
Honest, I don't have the exact number, but it feels strong. I think one of the indications, if you look at the real estate market in Silicon Valley, Palo Alto, I think I heard some numbers like maybe, I don't know. I mean, is that once they're a big number? I don't know exactly, but a lot of talks about the new money is coming from China. The buyers putting up cash offers, stuff like that. I think several reasons for that. The first one is because the fears or the uncertainty in Chinese economy. Second is the fears of renminbi continuing depreciation, that really driving the capital to flow out of the country. And in China, you either invest in real estate or you invest in the stock market. Stock market is not doing well. The real estate seems like some bubble. And when you take your money out from China, you what else you can do? So you invest in real estate, which is smart investment usually, which is good. And the corporate, if they wanted to have access to technology, I think Silicon Valley is, by logic, probably the #1 destination for those capitals. So we have seen that. We have seen, both for corporate, like Baidu set up research center here, invest in companies, and also see some other Chinese venture capitalists kind of looking over here to trying to have access to the deals here. So I think, however, I see the speed slowing down. Some reason. I still see them coming, but I think they passed the peak.
Okay.
I think the peak probably occurred, in 2016.
In terms of Chinese money coming over.
Coming over here.
I can elaborate why.
All right.
So
Okay.
what you may not know is I'm actually an advisor to a Chinese company that has raised a boatload of money. So I make about 4 or 5 trips a year to China, right? And I spend a lot of time talking with investors who are looking at investing in funds here. Most of the excitement I now see is Chinese investors wanting to invest in Chinese companies back in China. R&B funds, a lot of R&B funds out there investing locally. I run into entrepreneurs here quite often. Usually they are Chinese entrepreneurs who are based in the Bay Area, and they have raised money in R&B funds back in Beijing or Shanghai or other places, and they're looking to add $1 million here because the RMB funds can't be transferred out. So what I've seen in the last 6 months is it's been much harder for Chinese investors to move money out of China to back into dollar funds. So there's a lot of money available in China. Not all of that can flow out. So I don't know when to expect, but I do expect a slowdown from that to hit the shores sometime soon. It is not as easy as it was 6 to 8 months ago. And part of the reason is the Chinese government instituted what I understand is a test for a VC. You may be familiar with that. There's a test you have to give as a VC. The test is pretty easy, but you have to file for a test, you have to stand in line. The line's pretty long. So, to pass, you have to get through a long time. Expect a slowdown.
Yeah, I mean, I call it venture tourism, and whenever we see an economy kind of grow at the pace that China and open up in the way China has, there was, venture tourism from India a couple years back. The 90s were full of venture tourism from Japan, and so on and so on. So, I think what we're seeing in China is very different. We just completed our first transaction selling a Silicon Valley startup to China. And that is, frankly, in my opinion, as or more interesting than going and getting Chinese capital here, because nothing is meaningful to a Chinese investor like them actually being able to see an exit in their own home country. So I think that the dynamic is changing. We've heard a lot about it. We haven't seen actually a lot happen, and that's probably smart. We are seeing the more mature limited partners from China coming in now. We're actually seeing institutional partners come in. And I think that what that says is the gold rush cycle is ended and the professionals are coming in. And I think that that's kind of what we're talking about with frontier technology. I can tell you, we were mobile investors in 2002. We were way too far out in front, and we invested in a mobile deal with you, Bill, in 2004. Had we kept that IP, and that company blew up because, one out of 10 survives. Had we kept that IP, Facebook would have to buy it from us right now. What were we thinking?
So, okay. So speaking of tourists, that was harsh. But in any case, and I don't want to characterize it as this, which is corporate venture capital, right? So the other thing that has certainly happened over the... Did this die? Yeah? Okay, it's still there, right? Okay. The other thing that has certainly happened, I don't know what your feelings are, but certainly in the last 3 years, corporate venture capital has become huge in Silicon Valley. I mean, pretty much every brand name company on the planet, even if, they make cars, for example, right? Or not necessarily electronics, or if they make food, even, for example. I mean, set up labs here, or Linda, I don't know, yeah, right. Or if they make Gore-Tex, right? Every corporation on the planet is setting up a lab or a innovation center or a corporate venture group or a development group here in Silicon Valley. Has that peaked, or is it just starting? And what does that mean for the entrepreneurs here? Should they be spending more time getting to know the corporate venture world?
No, don't do that. Don't even start. So I love corporate venture capital. It's a lovely thing, but it doesn't move quickly. And it's an important part of our ecosystem, but it's not a really important part of your ecosystem. If you all were B-round funded companies that were generating $2 to $5 million per year in revenue, then we all could sit here and have a very strategic 3D chess-like conversation about corporate venture capital. But if you're an early stage entrepreneur, the only thing you can do is help corporate venture capitalists understand your business, which is kind of the bulk of their job. Now, what I do is I break corporate VC into kind of two buckets. There's what we call real corporate investors, which are GPLPs. That means that they're investing out of kind of a fund like we do, which means they have to return capital. Then there's corporate innovation investors, which means they're investing off the balance sheet. Now, what is important to you to understand about that is their motivations are different. If they're investing off the balance sheet, they're not necessarily looking for a return because you're going to be successful. They're looking for some type of internal incentive that they can get from you, whether that's knowledge, whether that's R&D, whether that's proof points. And, many of you don't have the crazy, see-through glasses that can, take you all the way to the top of a corporation and say, are they working on something like you are? Or more importantly, are they trying to prove a thesis internally? And for a big company spending $1 million to prove a thesis that they might otherwise go spend $2 billion on is really cheap. And you don't want to be their guinea pig because they'll put you on a treadmill. It'll take them a long time to invest. Many of them have very challenging requirements. So at the end of the day, for a startup entrepreneur, which is what our crowd is, forget it. Go hang out, have coffee with them, but that's all I'd say.
Let me give you a.
I echo F's statement in general, but I also want to emphasize you put corporate VC in two buckets, but sometimes it's very hard to distinguish. Even the first bucket, you saying that they might be innovated, incentivized, just like a general fund, but you have to remember they are a corporate VC. They can never be like private fund like us, or totally motivated by IRRs. Yeah, great. Okay, wow, lack of better word. But corporate VC, there's always elements. Even they are not innovation fund, not investing their own balance sheet. There's some strategic thinking or logics or rationale behind it. Otherwise, they usually sort of proclaim that usually invest with the strategic value or strategic reasons. So we have to be very, very careful, to make sure that value, strategic, first you understand it. Second is aligned interests with the founder and the company. Otherwise, you tend to, kind of suffer, because their interests not aligned and will cause them problems in the future.
So I'll give you a slightly more nuanced perspective. So about 3 years ago, I would have shared the exact same perspective, right? And I would still tell most people that you want to go to corporate VCs, not too early, because their decision-making process is longer. And when you work with a corporate VC, it's quite likely you won't be able to do business with their competitors. Okay? That's very, very true.
That's what you would have said 3 years
That's what I would have said 3 years ago. Now I have a different perspective. And it doesn't conflict with the first one. But the second perspective is, look, funds have gotten larger. 5 years ago, how many billion-dollar funds were there? Handful, right? How many billion-dollar funds are there now?
Depends what day it is.
Right. Right. Yeah. If you include the Chinese, there are
Everything's
$20
just
billion
bigger
funds,
there.
right? So what's starting to happen right now is when you have a larger fund, right? Fund economics require that the market size and the potential exit for the fund for the company be very, very large. So you will find that most VCs, unless you're writing a check from start to finish, which very few people do, are looking for companies targeting very, very large markets, extremely large markets.
But it's always been like that.
No,
I mean,
it's not.
I remember as an entrepreneur
Let me
sitting.
finish. It's not. It's not. It's not. I think it's been expanded dramatically in the last few years.
by the unicorn craze.
Right. Exactly. And we all know this. The unicorn craze is bad.
But I lived through that in
know.
'94.
I
mean,
know.
do you remember
You're an
the Oracle?
exceptional guy, man.
No. But you remember the Oracle unicorn when Oracle hit? I mean, that was like the big unicorn.
Look, 5-10 years ago, you could get funded if you were going to go for a $1 billion market. Now, if you talk about $1 billion market, people say, well, and then next after that? So where I'm going with this is there are a lot of legitimate businesses that can be built in that space. And you may find that mainstream VCs may feel the market's too small, right? Your only two choices, if you didn't look at corporate venture capital, is to fake the market and make it look bigger than it is, or not to get venture funding.
We're too smart. For that.
And corporate venture funding is a legitimate source of funding for that. So if you think of it strategically, it can be used. 5 years ago, 4 years ago, I'd tell you, screw the corporate
But
VC.
how
Now
far
I tell you,
along does a company actually have to be in order to hurdle into the corporate space? Because I think that's one of the biggest challenge to an early entrepreneur.
I've been involved in companies that have raised the first 250 in corporate VC. Would I recommend that? No. But it's a very thoughtful decision you need to take. Don't take a VC's perspective on whether you should take corporate money or not, right? There's a different perspective.
Don't listen to us. I mean, you should never listen to us. I mean, we're totally jaded, and we have our own agenda. I mean, but we need you to do your job in order for us to do our job, so that we can all have a great Christmas,
Look,
right?
if you
I mean, so
cannot
it's
get money
like
from a VC,
ecosystem.
there's nothing wrong in exploring the corporate path.
Okay, so by the way, I should just check. Are there any corporate VCs in the audience?
Yeah, I saw a card float. I saw, yeah, that's a Huawei, right?
Yeah, there is? Okay. Yeah, we should get, anybody wanted any, well, okay. So I do think, I sort of agree with all of you in the sense that it's gotten more nuanced. There are, different flavors of corporate VC now, and okay. Sorry, this died. We're different flavors of corporate VC now. I think in some cases, if you have an esoteric technology, it just may be impossible for you to go too far in the, and especially, I mean, if it is a just dead nuts fit with some corporate or industrial play, that might be your path, And so right now, things like, I don't know, robotics. There's the corporates are way more interested in robotics than the VCs are, and robotics is having a renaissance.
Robotics are great. It's just the economics, right? I mean, to a company, right? That's a capital equipment purchase. Mm-hmm. To us, that's supposed to be unicorn. Those are very different kind of dynamics.
So there's a reason why VCs are more anxious about that. Okay. So all right, let's continue on the theme of how can we help the audience here. Okay. So trends that are emerging in either technology or in business models or in finance that you think are important for seed stage, early stage entrepreneurs to be paying attention to, or possibly, sort of a clever way for them to beat the system. Any thoughts on that topic?
I can. This one still works. So I'll go back to the theme I was talking earlier, which was mobile, and my personal thesis that mobile is so saturated, and it's now owned by a handful of companies. It's Google, Facebook's, Apple's of the world, that you pretty much have to acquire users. You have to be exceptional beyond belief, or more likely you're paying to acquire users. The whole viral loop model doesn't work that much anymore. Organic models don't work as much anymore. You literally have to look at paid models. 1 million users, what is it going to cost? That's the model you look at. So looking forward to 2017, I think it all makes it inevitable that there will be an emergence of new platforms that allow you to acquire users in different ways. Maybe cheaper for now. Maybe in 3 years, they'll end up in the same model where you have to pay them a lot of money to acquire. But be in the watch out and look out for platforms which are small today. They may have 5 and 10 million users, not quite the billion users Facebook has. But you may be able to acquire users on those platforms much cheaper and much faster.
Are you heading down the social media influencer path, or where are you going?
I'm going down still the software path. I'm not down the influencer marketing path. Okay. That to me still is, it's interesting, but it hasn't been proven yet at scale. I'm still on the software path. So you might see interesting companies emerge that essentially, I don't know if it's an AI company that's now a different way of acquiring users. My prediction is by 2018, you'll see at least one, maybe 3, 4 companies emerge that will allow you to acquire users in different ways. So give you an example, bots, right? I was on a panel talking about bots just a few weeks ago. And most bots you're seeing right now, Facebook bots, they're ridiculous. Have you tried the Kanye West bot? If you try that bot, make sure you show your spouse that you are playing with the bot, because you'll have a lot of explaining to do why you have that bot running on your phone, right? Trust me, you'll know what you mean when you try it if you haven't tried it. The guys who are smiling, you've tried it, right? But you do that because today it's easy to acquire users in that channel. While as if you were to try any other way, it's $2, $3, $4 per user. So that's a challenge. I think new platforms will emerge to help you solve that problem.
Yeah, I just say look for the white space or the green field or whatever sort of term you'd like to use. I mean, there is still so many areas to disrupt other than creating the next X app. And we've got a great company that is disrupting the staffing space. That is a boring sounding thing, right? but it's a $130 billion business, right? We have a company that does genetics and concepts like that on the hemp and cannabis plant, okay? While everybody's thinking about the 12 or $15 billion marijuana market, we're thinking of the $300 billion protein market, where hemp will replace soybeans, or all the global food companies believe. So there are a tremendous amount of areas which make a lot of sense to go attack, especially in the core areas like financial technology. There are areas in food or agriculture that we look at. Big data, you know, I think everybody looks at these big things like IoT. I want to go do IoT, right? Well, you know, don't want to go do IoT. You want to use IoT to go do something interesting to people, right? These are enabling technologies, right? Every time we look at it, you know, a pitch from a company that starts with like 8 buzzwords, we get worried. Because if they tell us the story, and you know, you probably know Jean-Louis Gasset from Allegis days and Apple days. I spent a lot of time with him, and he used to have the best story, which was the deck that comes in that you would fund on the least amount of slides is the best company you're ever going to fund, right? If you can tell me your story in 3 slides, that's the best deal. If you take 30 slides to convince me to do it, then you're way behind the curve. So if it's simple and it's easy and people get it and people care, we're always going to fund you. You know, as long as the economics don't work. But if it turns into a research project, that's better left for other folks other than us.
Any trends, Stephen, that you think entrepreneurs should be paying attention to that might change the entrepreneur game, might change in some way that, we should be knowing, we should be paying attention to?
Right. So there's a term called the DMC shift, stand for data, mobile, and cloud. And I think that's already happening. I think looking forward in 2017, I would remind everybody to watch out the AI, meaning that I think automation or everything is going to be very interesting. I don't think that will controversial or short-lived like a frontier technology VR/AR. I think that's still far out. But I think AI is basically, because we have a lot of sensors, Internet of Things, data available, will make it that possible, machine learning and deep learning possible to make automations more interesting. I think that's the theme entrepreneurs should be watching out.
I was, we had a little bingo thing going here. I was wondering when somebody was going to say AI. I can't believe it took this long for somebody to say AI. Yeah. So,
wait, I
so
said AI in the intro. I just slid it past. That's one of the things we invest in. So, there you go. I thought everybody wrote that down. Didn't you all write that down?
That, Bill, that's the advantage of being the last.
Yeah.
Right?
Okay.
Who said, first mover advantage always exists. Sometimes the last one, has a certain
as a big trend. So, okay, I want you guys to get involved here. So I assume you now all are just overflowing with questions for the panel here. Where is the microphone that works? This doesn't work. That one works. Okay. So we're okay. We're underinvested in microphones. It seems like there should be an app, right? Doesn't it make sense? Because we all have. There is an app. Believe it or not, there is an app for this. But it is. It's still challenging, right? It's. No, I know. I actually know. I do know. So, okay, question.
Okay. So the past quarter, what we have seen is the app downloads both on Apple Store and also in Android, they have plateaued. So definitely for mobile developers, it's hard to see the growth that previously we saw. So now the conversational interfaces, which are driven by AI and machine learning, so those are the areas where lots of entrepreneurs are looking at. So for those who are looking at seed stage and angel funding, what is your advice for these startups to position themselves?
Is the question clear? Okay,
So I answered this to someone just the other day, right? The question is specifically more, I assume, on seed funding. Because if you're looking at seed funding, look, a couple of years ago, we would have, at least a year ago, we would have said, get to 1 million downloads, that way we know there's product market fit. Now that's extraordinarily hard. So right now what I would say is find interesting platforms. Going back to my theme again, find interesting platforms where you can show active users. Don't worry about the downloads, right? People have seen a ratio of like 1 active user to 4 downloaded users. Just focus on the active users.
That'd be great. 1 to 4. Like 1 to 80.
Those are companies you shouldn't be investing in. But
If you only have 1,000 downloads, 1 to 4 is not bad.
1 to 4 is kind of the industry standard for a decent company. Anything below that, you shouldn't be investing in them. It's just too expensive. But my 2 cents to you would be find platforms which will give you access to 50 or 100,000 users. Don't worry too much about the size of the user base, but focus on how much engagement you can get out of them. You got to show insane level of engagement. In the end, you're going to have to buy users, but is it worth buying them? That's the question you have to answer.
Well, and I think it also economics. So first of all, we haven't looked at a deal that's been kind of mobily framed like that in years. And most of my colleagues at the bigger funds, we don't even think like that anymore. Mobility is a given. It is just a way that it works. So to me, at that point, this whole download concept is just your go-to-market strategy. And there are a lot of great marketing people in this valley that are really up to speed, that are way better than you at that. So instead of an entrepreneur who's busy building an AI voice-based system that you're building, to sit there and noodle on how to grab these users and go find these no, just go find some good marketing people who know what they're doing. You know, there's always a need for them in the valley, number one. And really what it comes down to is your core value proposition. Because if you have a strong enough core value proposition, people are going to use your product. And if you rely on a platform like Google or Apple to essentially propagate your model distinctly, you've got fundamental problems, because they're the ones who really, take the cream off the crop of that business. And you have to really look at ways that you can go out and do business directly with people who care about it. And you have to show real economic incentive for those people. You either save them time, money, you increase productivity, or you do something that they're willing to pay you money for. And, that's our test these days. If you can't get people to pay you money for it, then it's actually not a business. And that's sort of one of the oldest, kind of tenors out there.
Okay, next question.
So I had a question for the gentleman, Ephraim. So you said before that
We make this stuff up.
Sorry?
We totally make this stuff up here.
I know. But there'll be some. You have a different perspective
I'm
than
glad
we
you
have.
know.
Sorry? Yeah, I was an intern in
Wait, he asked me a question. Okay, go.
I was an intern in a venture capital some time ago. So you said that look for different opportunities, disruption in other industries. So for example, AI, machine learning, there is plenty of opportunities to improve processes in traditional industries or in things that do not seem apparent, like a mobile app is today.
Sure.
So if you had to give some advice to entrepreneurs, if you're trying to tackle problems that are not apparent, like giving people a different opportunity to do things in different ways, or cutting the time with which that they utilize for doing things, how would you bring these ideas to early stage investors? I understand that you're venture capital, but you're in the same space. So how would you bring these things that they're not apparent immediately?
Well, so yeah, I break it into two steps. Okay, so the first is non-obvious solutions are great. We're hoping that you bring us a non-obvious solution, because then we're like, oh, we didn't think of that. This is brilliant. Okay, and then we fund you. That's one. The second issue. Well, you don't realize that. Actually, the most obvious are the things that are like, everybody has a problem with this, fix it, right? So those can be easy. Now, right. Well, there you go. I mean, the other piece, boy, Bill Smart, smartest guy up here. The second piece, though, is behavior modification, which is what you've gone into next, which is your ability to kind of come up and say, well, I can save all these people all this time, and therefore it's interesting. That's not interesting. Because a startup we don't want to finance you trying to change standardized behavior. We want you to find that little slice in, they're sort of, we break it into two camps, right? Brave new world and bigger, better, faster, cheaper. So you have to fit in broadly to one of those camps, right? You're either going to be Brave New World, you've got to have that massive market Salil was talking about, this is moonshotty kind of stuff, and someone's going to bet big on you. The other side is better, faster, cheaper. That's what you're talking about. Can you figure out that if you use your IoT to figure out, turbine lifespans for GE, that's a big business. Now, is it a venture business? Now your question is, how big could your company be? And at the end of the day, if GE is going to buy you for $30 million, that's great for you. And there are a lot of angels out there that will invest in that. But it doesn't work from our economics. So you got to find the market Salil was talking about. You got to find the white space to get into that market. And you can't get people to change for you. They have to change on their own.
Thank you. So just to top off on that, the other thing on this point of, how do you prove to an investor that you've got something exciting, just to reiterate the point, if you can show people who are, whether they're businesses or whether they're consumers, who are insanely, passionately, desperately in love with what you're doing, and they do in fact change their behavior, that's really different. If you're promising that if people only change their behavior, then we'll be a big business, then F is absolutely right, and you're effed. Okay, Arjun. I'm sorry, I had to say that.
Okay. That's why they call me F. I'm either your best friend or your worst friend. It goes either way.
Hi, we're building software that helps corporations manage their corporate performance. So goals, metrics, all the way down from the top to the individual and connected. So the question that I had is, there's a lot of talk and hype about on the consumer side. We talked about, pretty much most of what we've talked about is what's that driver on getting the customer, the consumer, the 1 to 4, 1 to 80, all that stuff. So what is the thought process on the enterprise side, and are you seeing a shift in how venture capital firms are thinking about those solutions?
I'll make a couple of predictions around that space, right? So we primarily do enterprise, do some consumer, primarily do enterprise. My prediction is in 10 years, you will see a large number of companies that you can no longer identify as a consumer company or enterprise company. They'll be doing both. Facebook, was my guess, will be the first one, but they won't be the only one. You will see a number of companies foray both into enterprise and consumer. But one thing I want to get back to is your startup, right? I would love for you to be super passionate about what you're working on, and rather not describe what you do, but rather describe the problem that still exists. The way I would like to see you sell your thing is to say, in all these companies, the first Fortune 500 companies, their performance is underreported or undercalculated. And if that's this big a market, why aren't you guys focusing on that market? That's the way I would like for that to be pitched to me. When it is pitched to me in that form, I'm going to say, can I have your card, and can I get a more interesting conversation with you later? I want to understand the problem. Going back to his 3 slides, I don't care about the solution. That I'll get to you in a meeting, say 3 or 2 or 3. Is it an interesting enough problem for me to worry about? If you can articulate the problem to me like nobody else's business, I think you'll be smart enough to figure out a solution, particularly at the seed stage.
I'm going to test Salil on this. All right? Salil.
I fail doesn't mean I'm wrong.
Salil,
I'm already hammered.
cancer.
Yes.
Big problem? Give me money.
No. Articulate the problem and tell me what specific form of cancer exists. What are those numbers looking like? Why certain things?
Small cell lung cancer, hundreds of thousands of Americans every year die, millions around the world. Big problem. Give me money.
No, you get a...
That was like 12 years ago.
How's tomorrow afternoon for you? I'd love to have some time with you to understand your background. You'll get that meeting.
Will it? Okay. You will, of course. You'll even get to pay for I'm not sure where you guys are on this, but so I'm on the entirely opposite end of the spectrum. Because almost every one of you, if you're just clear about what your solution is, it's obvious the problem you're solving.
I don't buy that. Sorry.
Left brain, right brain thing.
Dude,
Okay. Enterprise is a settled sport. You know, these are things, occasionally you have a box that kind of gets in there and gets this early traction. And eventually they end up in 18-month sales cycles like everybody else. So, and there's a great company in my office right now that, now is a big Canaan company because we were little guys early on. They're doing $3 million a quarter in enterprise scaling in AI virtualization of storage, which sounds like the most boring thing in history. But these guys have gone from 0 to 12 million in revenue in under 2 years. Okay, so you have to look at how big the problem is, and you've also got to figure out, are people going to pay you to solve the problem? So I defer from my friend Salil here. This isn't about finding problems. This is about finding problems people will pay you to solve. There are plenty of problems in the world, but not all of them people will pay you to solve. So your thing is great. I mean, everybody would love to see it, but what are they willing to pay you? And how far up the food chain does it go? If the CFO bangs his or her hand on the desk and says, buy that today, I want to see you. If like a senior manager in some compliance department's like, yeah, maybe we'll get this in 3 or 4 quarters, I don't want it. No offense, but you're not going to be around long enough for us to move, right? Because I remember our model, right? We're a 10-year fund. So if you think of it in a sports game analogy, right? If you score the winning goal 1 second after the game's over, it doesn't matter. So we have an issue of trying to get it in between the goalposts of our time cycle. So you could be the biggest company in history, but if you do it on the 11th year and you go public, that doesn't help me. And even worse, if you're not doing it even much faster, it doesn't help. So think about speed to market, maybe a lighter weight solution is the way to go, and then find great enterprise marketing people. They're out there.
So I actually don't disagree with him. You do need to find something that pays you. But my problem again is if you can't articulate the problem. No. Well, it's an enterprise startup, right? You're not going to count the number of users, right? But it's a question of what is the problem, your understanding of the problem. Most people try and shove a solution on me. Cancer is different. I'll give you that, right? Right. Well, I will say, look, I'm an investor in a technology company that we haven't figured out the applications for yet. There are a few like that. But in most cases, what you are working on is solving a problem. Yes, I did.
You invested in a technology in search of a problem to solve.
Absolutely.
Okay. Are you happy about this?
I am, but that's not every day that I do that kind of company. I'm more likely to tell me your articulation of the problem and why you're likely to win and why you're likely to make money, and then we'll figure out the solution rather than, I've got this technology, this can do wonders.
Investors. I don't know about Salil, man. We're not like coffee house type. We're not sitting back like, maybe this is going to be great. We're like, I want to talk to, if you're going to get a check from us, I better talk to 5 customers of yours. Okay.
Yeah, so just to add to that. So the way that I understand that is not only do I have to be clear on the problem, I also have to have the validation from the market. So before I come talk to you, I better know that it's actually a real problem as opposed to one that I've kind of created in my head.
Minimum bar. You got to get customers, revenue, and prove you can actually scale that business.
The core is really what I've said.
He's Series A investor.
Yeah, I was just going to say that. Series C investor. I'll disagree with that story. Right.
So we've been sort of disintermediated, and this is important for all of you guys to understand it. Now's the best time to be an entrepreneur in the history of entrepreneurs. There is more money, there is more resources, there's more help. Our friends at Boot Camp here, they will capitalize you, accelerate you, and angel you, all in one place. And what you have to look at is 10 or 15, when I was an entrepreneur, and I won't give away my age because I'm really old, but there was none of this. You went and, on bended knee, went to a former, Silicon Valley guy or gal who made money and say, please give me $50,000. And what they asked for was torturous. So this is the best time for you as entrepreneurs. There are mechanisms to go test out ideas. There are mechanisms to go do all these things. And there are plenty of angel dollars and angel funds and everything else out there for you to get before you come to us. And I think what's really happening is we're seeing this differentiation between what I will will call professional investment, which means that my job is to get an IRR for my investors. And these broader kind of businesses, right, whether it's marketing, accelerating, and all these other pieces of the story. I mean, is that business to invest, or is that business to fill space or to do other things? And we're now seeing the crashing of those angel groups. We saw a deal in New York recently, and a very well-known VC came to me and he said, an angel group funded this company. That angel group is now gone. They're all suing each other because no one wants to run it. And that angel group owns 20% of the company. They can't get a sign-off to close their next round of funding because no one in that angel group will essentially sign the documents. So, you know, now it's changed. My answer is now you guys have all the colors of the rainbow, but now you have to do due diligence. You know, is the accelerator in that nice, cool building in San Francisco with all the fancy stuff going to be there in 2 years? Or are you going to find your server sitting out on the curb and there's a guy sleeping on him? So think about that.
They don't have the servers. Okay, next question.
All right, thanks, guys. So, so I run a hardware services company, and there's been a lot of changes that I've seen in the hardware space over the last few years, and I wanted to kind of get your thoughts on, it's almost like a two-part question. What do you see for hardware going into 2017, and then also the changing dynamics with China and the US, and feel free to answer both.
Hardware services company. Do you want to get to one more sentence?
Yeah.
Hardware services company.
Yeah, hardware's a big place.
General contractor for startups that would help companies go from idea to scale.
Contractor to me involves nails in any bathroom. Tell me what.
Yeah, electrical design, mechanical design. Yeah, we provide all the so.
Like a mini Flextronics.
We're
Or are you a design shop?
we're like a general contractor, so we're a consortium of 15 companies. Okay. So I'm like a general contractor, and then I have partners like Riverwood Solutions to help companies get where they want to go. Yeah. Yeah, this isn't about me. It's more the broader strokes of what's happening in the hardware space that you see. And for example, Pebble just recently got a yeah, exactly. So
I'll give you the perspective. Well, I'll give you the perspective. I'm involved in a couple of companies that are in a similar situation. They've raised seed funding on the hardware side, and they're about to raise an A, right? So I'm involved in that conversation of when are they ready for raise an A. I think there have been quite a few examples of companies that have exited either with seed or A, and have made decent returns for their investors. I don't think we have a model where somebody is worth a hell of a lot of money in real dollars as opposed to kind of the acquisition virtual dollars. I think there's a trend going on where people are saying, well, what is the recurring revenue model around a certain hardware startup? So I think hardware is interesting because we're living in a world where to touch the physical world, some level of hardware is necessary. Okay? So I don't see anything wrong with doing a hardware startup. I think there'll be a lot of opportunities. But I think gone are the days when you can say, I'm a hardware startup, I'm going to do a one-time sale if it's a consumer hardware, right? And I can build a business model around it. People really want to see sustainable business models. We've literally seen dozens of deals in the last just a few months on hardware. And for A, the first question we ask is, what's the business model around the hardware? Figure that out.
Okay, so wearables are the mobile of last year. Wearables are going to crash. So follow us on Twitter. Yeah, they're done. I mean, so you know, in fact, at 11 a.m. tomorrow, you'll see some great data come out from us on Twitter. So follow Advanced Ventures at Advanced Ventures on Twitter, and the data suggesting that, you know, Pebble wasn't acquired because it was going to be a superstar. Fitbit's had challenges, et cetera. I think the issue is where you're looking for hardware. You need to put a little I in front of the IoT, which is the industrial Internet of Things, because that's where the dollars are happening right now. You know, construction technology, you know, other areas around oil and gas. I mean, these are, you know, military contracting. All of these areas are really strong businesses that can get to be strong models. And, you know, looking for the next little wearable device, very challenging. But digital health, tons of hardware. Okay, you look at some aspects of fintech, there's hardware. You look at food and ag, tons of hardware out there. Okay, but if you're trying to shoot at the consumer zone, if Samsung isn't part of your company's name, it could be a challenge.
If Samsung is or is
I was just going to say.
I don't know if Samsung is part of your company name is a challenge, clearly, right? Okay, that's a side point. All right, okay. Are you telling me, okay, we've now answered every question that has occurred to everybody in this?
Except one.
Is that astonishing?
Except one.
Except, do you have a question? Okay, all right. So before you go, though, before you ask your question, and in case there's some other questions, I wanted to go a little bit orthogonal for a second here, and I wanted to ask you guys while I have you, do you think Trump will be good or bad for the innovation and venture ecosystem?
We'll start with Stephen out there.
Yes.
He hasn't had much of a chance.
I agree. You were the one who first did
Yes. I'm happy to take that challenge. But do we have a target to compare, or what's the benchmark?
You established the frame. You established the frame, and then answer.
Okay. I think Trump will be better than most people think he is in terms of technology and innovation. At least I hope he will be. So
Ask if you hope.
I think he will be better than I think. So that's my opinion in short.
Is there a flavor in there in terms of why you think he will be better? Will he be better because he'll be better for the overall economy and that's a good thing? Or he'll be better because he'll get rid of regulation and that would be the thing? Or he'll be better because, he's going to believe in innovation and pump money into the military and that's going to be a good thing? Or all of the above or none of the above? Or you just think you hope he will go to war with China?
Well, I hope he doesn't go to war with anyone. I think war is a terrible thing for any side. There's no winner. So at least in the long term, you win the battle, but you lost the war. So the best strategy in military is to prevent a war. So that's what I hope he will be doing. I think he's very. I remember the impression I got with Trump. I started to think about. I read Trump's The Art of the Deal many years ago. So in the same I will not recall which year I read that. A long time ago. I think I was impressed with Trump by his practicism. Although I think most people in Silicon Valley will have a reservation about his view about technology, particularly about the immigration, many issues. I think made him not very popular here in the Valley, to say the least. But I think he's a very practical businessman, and he seems already saw some signs that he would backtrack some of the promises, whatever I believe he said during the campaign, and some positive signs. I think he would perhaps change his mind later on when he sees issues.
Okay, so I've got a little bit of an unfair advantage. So my family's been very close to, in a business sense as well as personal sense with Donald Trump. Ivanka, I actually sat with Ivanka when she was like 11 years old at my cousin's wedding at the same table. She was taller than me then, okay? Her children currently go to the same school with my nephews in Manhattan. So, I think the first thing you have to figure out is that was the greatest swindle in history, okay? Trump swindled all of these gullible people in the United States. He had a tremendous amount of help from Peter Thiel. He had a 120-person AI big data micro-targeting war chest. He set up teams here and in New York City that micro-targeted and convinced gullible people in various states to vote with him. And they used whatever mechanisms because he did not play by a theoretical set of rules that were in there. So number one. Number two, VCs live by pattern recognition. So that's what makes us, in theory, good, is to recognize patterns and trends and try and bet ahead of the curve on those. And when you start to look at the cabinet that Donald Trump's put together, I'm not going to get into the politics that were espoused, because that's not our job. We and you are here to make money and stuff. We can all take our politics out to a coffee house together. At the end of the day, the reality is this person is appointed I think the number as of today is $12.5 billion net worth of his current cabinet, which is the most by a factor of almost 10 in the history of modern presidency, okay? So, you know, the whole differential changes, and there was a great Saturday Night Live skit on there which basically framed it as he could say whatever he wants, but you now got the head of Exxon as our head of State Department. You know, it's really easy to figure out what he is going to do for the next couple of years.
So,
Would you have been okay if he had appointed Warren Buffett? That would have been okay.
Well, I mean, that's personal. I mean, you've got to remember, as an investor, uncertainty is our biggest fear. So whether I like the direction it's going doesn't matter, as long as I can define what direction it goes.
So it's not their net worth, it's the other factors, really, that you're saying. Okay.
So not smart enough, like these guys, to talk about whether Trump's going to be good or bad. But I'll tell you what I think is the impact on you guys, right? I think for most of the tech economy in the Bay Area, I don't think it matters one way or the other. You guys are going to go about and do your job like it is. If the funding dries up a little bit, as an entrepreneur, you rise up to the challenge, and the fluff goes away, and now you're competing against real startups. The competition for hiring employees has become easier. If the fluff goes up, well, you rise above the challenges of a great company, attract the right people to come and work for you, attract the right dollars to come to you. I don't think it matters one way or the other. You'll figure out a way. I think really where things get interesting is in manufacturing, right? One of the things he's promised is to bring back jobs in manufacturing. But if you have an opinion, you should go ahead. No. So I think that's where your opportunity lies. And here's the thing. We all know which country is investing the most amount of money in robotics? Anyone want to make a guess? It's China, right? So it's by far China. It's amazing the kind of stuff you're happening in China. So at some point you're going to see incentives to put manufacturing in Ohio, right? And guess what? The jobs are probably not coming back, but there will be manufacturing in Ohio. And it's either a Chinese company deploying manufacturing in Ohio, or you guys that are entrepreneurs deploying a manufacturing facility in Ohio. What happens is up to you. That's the opportunity that I think he may open out. Whatever his incentives might be, he's going to try and do something to get jobs back. I'm not sure that's going to work. However, that creates an opportunity for robotics to come in and play. And if you guys don't do it, then the teams in China are going to come in and do it. That's the one thing I see. I'm not on any particular political side, but I see that as an opportunity.
Yeah, I think I line up most with Salil. I think he nailed it for about 90% probability, right? 90% is probably he won't make a difference. But there is this danger of this 10%. And my biggest anxiety about Trump is that he will put a chill on the globalization of innovation. And my biggest anxiety is that, by battering the Chinese, by ignoring the Europeans, I just worry that we're going to have a little bit of a chill in a way that's somewhat similar but different, that happened with Russia. We used to have a lot of exchange with Russia. We hardly have any exchange with Russia anymore. And I think that's a loss for both countries. I would hate to see if that. I'm so anxious. I'm just anxious about that happening with China. It's a different scenario, but no.
When you pull the pin on the grenade, throw it in the room, close the door behind you, they don't come back.
That's right. Right. Yeah. So in any case, so enough about Trump. We'll see. We'll see. We'll all hope for the best, right? We'll hope for the best. Right. Right. Because you can't. There's not much that any of us in the room are going to be able to do about it, other than be good entrepreneurs, right? Okay. So next question. Question right here, Ned.
I have a question about point-of-care diagnostics. It's a very important field. I know wearables were mentioned. I think wearables at the very periphery of diagnostic, maybe sweat or tear, but we're really talking about invasive blood testing. Without diagnostics, there's really no real management of personal health care. And individuals will not get to own their own diagnostics until we have that technology. I happen to have a startup in this domain, and my question to you is, given this important niche and given the implosion of Theranos, how do you see the opportunities going forward for point-of-care diagnostics? Thank you.
Okay, big topic. Who is interested in point-of-care diagnostics?
Yes.
Yeah, so you are.
Yeah, so all right. So the number one challenge with point-of-care diagnostics is the regulatory issues. And I don't know if you're aware of it. You should follow us on Twitter. The federal government actually just came out with digital health rules and are coming into how do they regulate some of these sort of off-market related hardware products. I think Theranos did a huge disservice to your category. I think that really looks like the hucksters of the late 1920s that gave everybody in the stock market a bad name. Whether she did it, purposely or not, that's a debate for another day. Now, the problem that you have is, if you're talking about, the layers of that onion, we're invested in a telehealth company that takes low-cost IoT diagnostic hardware, not invasive, but external for the most part, and integrates it. That's great. The only problem is they've spent the last 3 years banging on the door of the health system. Now, they're already in, they just happen to get in. But there are a lot of hurdles between you and the goal line. Number one is, regulatory hurdles. Number two is a very slow-moving acquisition system, and so on. Now, I have a friend who has a company called Sensor 6, and she's got a little $250 sensor that tests for gluten so that moms who have gluten-free kids can double-check something. She's got millions of dollars in pre-orders because she was solving a really simple, important problem at a point. So, think of the regulatory issues, and if you've got to go do all that, then it becomes very challenging.
So you're saying, because obvious. Are you saying venture capital should not play in regulated healthcare? Is that what you're saying?
No. I mean, that's what we do, but that's a very different dynamic. You have to understand what that's going to take.
Okay, Ned looks like a really smart guy.
Sure.
Right? And okay.
Yeah, but he said the Theranos rule.
Right.
Yeah.
Okay.
But that leads me to believe.
So let's assume he's brilliant on the regulatory issues. What's your next concern?
I mean, it's going to be the technology and adoption. Oh no, you take it.
Okay. It's got to be, breakthrough, promised land, change the world, because there are tons of people chasing point of care diagnostics. So you've got to, you got to move the needle dramatically to get the kind of money and support to get through the regulation to beat all the competition. But did you have another comment on that?
So, I agree that Theranos, the explosion Theranos, give the industry a bad name. But on the other hand, I think as an entrepreneur, if I were you, I would welcome that, because that's also created the barrier entry. Fewer people, kind of Me Too model will be, around the market, and many entrepreneurs or entrepreneur want to be, probably will be scared off of that. So that created opportunity for someone like you who has some true technology and has the solution that the market would have a fit for it and willing to pay. I think that's I would welcome that. I think whenever you have regulatory issues and some other bozos, whatever, fake players falling off, that's a welcome change. So I would we did invest in a company called Sensely, which is virtual assistant for medicine using AI. It's not a hardware company, but it works very well with other healthcare wearables. For example, like iHealth, as you know, measure your blood pressure, measure temperature, measure weight. It works great. The foundation.
It's a data analytics play.
It's actually
You're taking the data and analyzing.
more than taking the data. Is actually provide kind of automation as a virtual nurse. The first 5-10 minutes work, the low end work currently done by nurse and doctors, can be done by machine. The as a conversation platform. So I think there's still opportunity there. As you know, people think the IoT things really the biggest vertical is in healthcare.
So we're running out of time here. So we're kind of out of time. But I just wanted, it's okay, I want to ask one last question, you guys.
Bill, can I make one quick comment before you go?
No. So in any case, yes, go ahead.
Well, it's specifically on your Theranos question, right? I want to make a general comment for most of you guys. I see broadly two categories of entrepreneurs. One who are really, really good at fundraising. They know exactly how to raise money on the cheap. And the others who are really good at executing, okay? Now, most people fit in the spectrum, but if you were to put these two different categories, when something like Theranos happens, right, those of you who are good at executing start winning, right? Because in a world where fundraising is the key, the guys who are executing and don't know how to fundraise are actually losing. So you should look at something like Theranos failing as saying, hey guys, it's back to basics. It's not the craziness of how I go and raise money. Back to what you were saying is understand the regulatory issues, solve one problem at a time. Because in a world like Theranos, you're saying, hey, hang on a minute. I was actually doing all the hard work and somebody comes and raises $1 billion, right? And why am I doing all this crap? So this may be actually a good world for the world you live in.
Great point. Okay. So, closing thoughts on the future, okay? I'm blanking on the famous, the predicting. Predicting what's going to happen is really hard to do, especially when it's about the future. I don't know, whatever it is. But in any case, I was going with the Yogi Berra quote, not the. So predicting the future is tough. But just curious about are there things in the corner of your brains that are these sort of black swan events that occur to you as something that might emerge in 2017? It doesn't have to emerge, fully born, but are we going to see anything particularly exciting in 2017, or is it just going to be more of the same? And we always start with you, Stephen, because these guys are cowards. Okay.
No, I mean, I'll take it. I was trying to be polite.
You should take it.
You want me to take it?
Yeah, go ahead.
Okay.
Let him answer.
Yeah, sure. If you want it?
Go ahead.
Go first.
Okay. You do it.
All right, so the deal is we don't predict anything. You're the guys that predict stuff, and then you have to come prove to us that what you're predicting is correct. Let's just break it down. I mean, our job is not to predict the future. Our job is to put a big net out, and you folks come to us and prove to us what you think is the future is valuable, and you have to prove it to us, number one. Number two, on the Black Swan side, we're venture capitalists. We are the eternal optimists of the planet. Okay. Meanwhile, I worry about everything. Okay. I'm like an old Jewish grandmother inside of myself worrying about everything. But that's not your problem. Okay. Your real opportunity is you need to predict the future. You need to create something, and then you have to prove to us you're right. That's your job. Our job isn't VCs don't predict the future. We are surfers. We ride your wave. You just have to prove to us it's the right wave to ride.
So by definition, black swan event is something that you don't predict, but once it happens, you start predicting it happening more often than it does, right? So I think for us, we should be looking at white swans right now, not black swans, because I don't know what a black swan is.
2017 is supposed to be the year of the tech IPO.
That's right.
That's your black swan?
No.
That now is a black swan.
No, that's
the white swan.
Okay.
Right?
Right?
Look, if you really want to.
It doesn't happen.
Right, there you go. Or no swan.
That's easy to write. Okay.
Look, I think 2017 is pretty straightforward. We know from a technology perspective what's likely to grow. I don't see any material change in 2017 from a technology outreach. That's too close a time frame for anything dramatically interesting to happen. I do feel that the uncertainty of the election is over, and I don't think the scenario is going to be too bad from starting a company perspective, right? I think the focus is shifted back to where entrepreneurs like us can survive, as opposed to the ones that can raise $1 billion without having prove out unit economics. So this is a good world. You may agree or disagree on the politics, but from a startup perspective, we're a little bit closer to basics. I wouldn't say we're back to basics, but we're closer to basics. This is good for all of you guys.
Okay, so this will be the year of the autonomous car. And mark my words on that, because everybody's heard about it. Maybe some of you have Teslas and do a little autonomous things. The minute you roll out of Kennedy Airport, New York, and a car without a driver comes to pick you up, or with a driver not at the hands of the wheel, that will be as important as an experience as the first time you got a flip phone, the first time you used a computer, the first time you did anything else. That will be even more so than Uber for a human change. So when you look back at 2017, and you will have taken potentially your first ride in an autonomous vehicle, either guided or unguided by a human, that will be a memorable moment, mark my words. And you'll be like, there was this like venture dude.
Guided by humans, don't you do that in San Francisco today?
Well, not legally.
Yeah, I think I'll take a challenge that I think the unguided autonomous car will be tough this year. I think computer vision is still not ready for that. So let's see that. If I'm proven wrong, I'll be happy to buy a cup of coffee. Okay.
Okay. So Stephen,
I'll buy a dinner.
what's your?
Wrong all the time.
Yeah. I think it's kind of bad, dangerous job. Whatever you predict, it probably most likely turned out to be wrong. I remember this Morgan Stanley guy. What is his name? Oh yeah, Bryant Wynn, and predict always every year the 10 things, and I keep track. I think probably 2 or 3 years, because whatever he predicts. 7 or 8 out of 10 is wrong. so it's hard to do that. But I think if we have to predict something as a black swan event, I think I'm worried about the IPO, to be honest. I worry about the IPO, for example, Snapchat. Could that be,
Trump just appointed a complete cabinet full of Goldman Sachs bankers.
Yes.
They know nothing but how to make money doing IPOs. They are not going
Yeah.
to reform our financial system. They're
Yeah.
going to push them through the pipe. They're going to make George Bush look like a quiet IPO market. Really.
That's really worries about me, because those bankers, fancy Goldman bankers, is good for the company, but might be bad for those retail investors. It could be a flop that will affect Silicon Valley.
Okay,
So that's my worry. I mean, not just Snapchat. It could be,
right.
I don't know who else is coming to the market,
So
pricing it too high.
You're worried there's still technology that a lot of the high-flying technology companies are indeed overvalued, and they
Absolutely.
Okay, and
Yeah,
that
absolutely. Way overvalued than the current property market. They were priced in the private round so high.
Yeah.
I mean, they had to do a down round, but the resistance to do a down round is so heavy. As you know, I know one of the Chinese company, I forgot the exact name. The stock symbol Z2O, price is 19, over 20x subscribed. When it goes to the market, the first day down by over 10%, and by now, 40, 50%, something like that.
Okay,
At least
so
30%. So I'm really worried about that. The private round I think is still too high. And the public market is much healthier than private.
Yeah. So, okay, so that's the outlook on the future. Some anxiety about whether or not the public markets will be able to sustain this, high-priced private unicorn world. High confidence that you'll be in an autonomous vehicle and that everything will go public next year from F.
That will be your neat experience.
I'm going to put more than a cup of coffee on the table for F on that one. Against.
That won't be your eye-opening experience this year?
So, well, it's a longer conversation. So in any case, to be continued, and that's what 2017 is all about. So thank you guys all for joining us this evening. Sorry we ran a little bit long. Sorry we didn't, cover every topic, but that gives us an opportunity to come back and do it more. So if you would join me and encourage my distinguished panelists here to come back someday. Thank you.
And let's give it up for Bill Reichart.
Yes.
Ladies and gentlemen, stay in your seats. I forgot to mention this at the outset, but we have a raffle, and I know many of you stayed for the raffle. The grand prize is $100 cash. Who could use $100 cash tonight? Okay. Well, if nothing else, someone's going to get funded to the tune of $100. But we have some other prizes before we get to the grand prize. So first prize we have is the classic Idea to IPO coffee mug. Santa? Oh, has everyone entered who wanted to enter the raffle? All right. Okay, Santa. And the winner is?
All right. Shankar Swami. Are you here? All right.
Well, you've got a startup. You need to drink a lot of coffee, so we're just setting you up here.
Next up, we have, not yet. We have the classic Idea to IPO jacket. And the winner is?
Savika Kini. All right.
Come on down. Kevin from Cuckoo's Nest has a prize. Kevin, what's the prize from Cuckoo's Nest?
So we have here a complimentary 1-week membership to the Cuckoo's Nest. Ready? Drum roll. Yeah.
Sanjay PK. Sanjay, are you here? All right, next one.
Sorry, snooze, you lose. Next.
All right. Subrana Mitra.
Okay, so the next prize is a pass to all Idea to IPO proprietary events for January 2017. We're going to have a really busy schedule in January. The winner is?
Okay, Linda Elkins.
Linda, going once, going twice. Come on down. All right.
Venture out and you shall receive.
Nice sweater, too. So now we've got the grand prize. Yes. And yes, that's real. I got it at the bank. I got it at the bank. Not yet. I got it at the bank that I will not mention. So if you believe that you shouldn't be using cash and you win this, please return it. And the winner is?
Okay, Stanley John. Are you here? Stanley? All right.
Close to the camera. Close to
Photo bomb.
Bill.
All right, folks. So we're going to have after events reception back at the Cuckoo's Nest. There's still pizza and some grapes. So thanks everyone for coming, and see you next year.
All right.